Yeah, hey there, what's up? I'm Russ, your wealthy welder friend who has a burning passion for passive income. It's the middle of May, and that means we have some very fresh 13F info. So what's a 13F, you might be wondering? Well, the SEC here in the United States requires any fund manager that manages over $100 million in securities to give us a snapshot of what they have in their portfolio 4 times a year. And we're going to be talking about the mystery was finally solved. What stock Berkshire Hathaway was so secretive about that they have finally purchased. And then we'll look at that stock a little bit more in detail because it is a dividend stock, and we'll even get you a fair value on the stock. So this will be linked in the description below. You go to 13f.info and it's free. And what do we say? If it's free, it's for me. So we have under the most searched managers, Berkshire Hathaway right there. Click on them. And then in their summary page, under most recent 13F, is what we're going to click on. We would be brought to the Q1 2024 13F holding page, but we want to compare that to what they did in Q4 2023, and it'll bring us to this comparison page. Now, something very important that I want to point out, these are the holdings as of March 31st, 2024. So there was a snapshot taken of Berkshire's securities portfolio, that means the stocks they held, on this date, and it was filed on May 15th, 2024. So this information could be stale, so do not ever go run out and buy something just because you heard Warren Buffett, Berkshire Hathaway. We don't even know. They don't disclose who did the buying. If you follow them, Todd Combs, Ted Wexler do a lot of buying around there, so we don't know if this was a Buffett move or if it was Todd or Ted. So either way, just know this is a little bit stale information, and you always have to have your own conviction and do your own due diligence and research. Now we'll sort it out and see what it is they bought. Boom, check it out. They bought Chubb, ticker CB. And Chubb is a global insurance powerhouse that provides all kinds of different insurances to both businesses and individuals. So they bought Chubb, and then over here under the value, you'll see that they dumped about $6.7 billion into Chubb. They also added to their Liberty Media, LSXMA, and LSXMK positions, and they added to their Occidental Petroleum Corporation, ticker OXY, which Warren seems to have a pretty big oxy addiction as of late. So all in all, there you go. Chubb is the new position, which we'll look at in a minute. The different classes of Liberty Media, they added 62% and 52%, and then they increased their Occidental Petroleum holdings by 2%. And then we'll toggle change again to see what they sold. Couple sales. They sold completely out of HP Incorporated, ticker HPQ. Now, they did fully sell out of Paramount Global, but you see how interesting this is because on the day that this was taken, remember, March 31st, 2024, they had sold out 88% of their position, but by the time the annual shareholder meeting rolled around, a couple weeks before this video was made, they announced they exited completely. So that's information that won't show up until the next 13F filing, but they did sell out of all of Paramount Global. And what I love about it, Warren said he was wrong. He said it was all his doing. This one was on me. And they lost, I think, about $1.6 billion or so from Paramount. They reduced that holding in Apple. Again, this is a thing on taxes. If you listen to the annual meeting, they think that tax rates are going to go up, and they wanted to get ahead of the game. So they trimmed one of their largest positions. They sold off 9% of SiriusXM, ticker SIRI. Louisiana Pacific Corp, ticker LPX, they reduced by 6%. And then Chevron, they reduced Chevron by 2%. And they increased their Oxy position by 2%. And then if you want to poke around their portfolio holding and see what they hold, click on value. There we go. We see the biggest is still Apple, Bank of America, and all the way down here, look at Chubb, their 9th biggest position. So just a really cool site where you can keep tabs on some of the big fund managers and see what they've been doing and what they're holding. This is the 2023 Berkshire shareholders letter that Warren wrote, and I found it interesting that he said Property and casualty insurance, P&C, provides the core of Berkshire's well-being and growth. They've been in the business for 57 years. And remember, Chubb is in the P&C industry, that it's kind of interesting that they're deepening their footprint into that space. Now, this is simplysafedividends.com. Does cost a pretty penny. Currently, they give a dividend safety score of 99, very safe to Chubb, which again is in the property and casualty insurance business. And by the way, we're going to go a little quick, so pause the video if there's anything more in depth you'd like to look at here. They have a 30-year dividend growth streak, 122 years of dividend payments without missing one single payment, 8% 20-year CAGR, which is fast growth. Last was 5.8%. Now they pay their quarterly qualified dividends every January, April, July, and October, which is good currently for $3.44 a share annually. Their dividend yield is currently 23% below the 5-year average. And remember, when you see a PE ratio, all that would mean is if it's 11.4, you're paying $11.40 for every $1 of Chubb's earnings, and they are almost at the high end of the 52-week price range. So on Simply Safe, they show 10 years of financial data, which is a really nice visualization. For insurers, we want to look at the earnings payout ratio, which is very low, 17%. They can easily pay the dividend. Earnings per share going up nicely, although there was that air pocket in 2020. Mid-teens sales growth recently, which is nice to see. Earnings per share growth in the 32% range. This is one thing you always want to look for. Total sales, you got to have revenue increasing. I don't care how good a management is. If your revenue is not increasing, you can only financially massage and manipulate things internally for a time. But total sales, total revenue has to be going up and to the right over a long period of time. They've been buying back shares down to 412 million outstanding. All their margins look pretty nice. Return on invested capital, 12%. Remember, as they say here, that's basically showing the capital allocation skill of the management with money put in by both equity, the stockholders, and the debt holders. Return on equity can be manipulated by share buybacks and things, so we'd like to see a nice, healthy return on invested capital number. And check out that free cash flow margin, currently 26% of every dollar coming in the door. 26 cents of every $1 is making its way to free cash flow. Their debt situation looks to be pretty in control, and especially I like their interest coverage ratio. Remember, that means they have $14.82 of operating income to easily cover every $1 of interest on their debt. Couple valuations for you here. If we jump on over to alphaspread.com, they give an intrinsic value of about $350. Remember, it's just a range. You can't extrapolate this out to 2 or 3 decimal places. It's just going to be a range. So about $350, making it about 28% undervalued. So says Alpha Spread on the base case. And if they were to have about 5 years of negative growth, that would be about $237 on the worst case. So this is kind of like your margin of safety that Alpha Spread gives. So that's Alpha Spread. But if we go over to Morningstar, they give Chubb a fair value estimate of $236. So kind of interesting. Their fair value estimate is about in line with Alpha Spread's bear case estimate. And according to Morningstar, pretty much the bulls say that Chubb is a large insurer and they have international operations which are going to benefit them and give them a lot of growth opportunities. But on the bear side, they say because they deal with large corporations, that could hurt their bargaining power. And I found it interesting that they think Chubb's life insurance operations are dilutive to the company's moat, and they don't see a valid strategic connection with its core property and casualty operations. Now, because we're all transparent and stuff around here on this channel, in this floating little box next to my head, I back-tested some picks we shared on the channel from about a year ago. So if you want to see also a dividend king that may be undervalued, click that little floating box right here next to my head, and we will see you there.